You're still using the 2024 AI Playbook, but the game has completely changed. Keep investing like that, and 2026 won't just slow you down, it'll wipe you out. A massive shift is happening underneath the stock market, and almost everyone is on the wrong side of it. Let me show you the 10 companies positioned to win this new era. All right, let's get right to it. You see, that initial gold rush, that phase where everyone piled into AI hardware suppliers like Nvidia, that's maturing. The window for making easy money in the so-called build phase of AI is slamming shut, and a totally new, way more selective era is about to begin. And this slide right here shows you that pivot perfectly. The 2024 playbook was all about buying the shovels, investing in the companies building out the AI infrastructure. But the 2026 playbook is about finding the companies actually using those shovels to dig for gold, to generate real, tangible profits. This is the absolute key. We're shifting from building AI to deploying AI. Look to navigate this pivot, you're going to need a new strategy. If you want to understand which companies are going to lead this next wave, go ahead and subscribe right now. This isn't just another market update. It is a fundamental change in how you need to approach your money. Don't get left behind. So let's really break down this new thesis. That old AI trade is dead and gone. We are now entering a period we're calling the Great Normalization of 2026. And this marks the real start of a true productivity supercycle. So what does that actually mean? It means the era of cheap money and growth at any cost is over. The new backdrop for 2026 is interest rates sitting stubbornly between 3.5% and 4%, with inflation that just won't go away, hovering around 2.5% to 3%. And in that world, the market is only going to reward one thing: genuine, high-quality earnings from companies with massive free cash flow and real pricing power. Okay, so how do you build a portfolio for this new environment? We're using a 50-30-20 allocation. This entire framework is designed to give you stability while still capturing targeted growth and high-reward plays. Let's start with the foundation, the 50% core safety net. This is the bedrock of your 2026 portfolio. Half of your allocation goes into dominant, fortress-like companies that generate massive amounts of free cash. These are the undisputed champs in their fields, and they'll provide the stability you need in a much choppier market. Here they are, our core 4 pillars. Microsoft, basically the operating system of the entire AI economy. Amazon, a monster in both logistics and the cloud. Visa, the ultimate toll road on global commerce. UnitedHealth, a pure play on the unstoppable aging population trend. Now, all 4 are critical, but let's zoom in on a specific 2026 catalysts for Microsoft and Amazon. First up, Microsoft. You need to circle October 2026 on your calendar. That's when support for their old Office products officially ends. This creates a forced upgrade cycle. Corporations will have no choice but to migrate to Microsoft's new AI-powered software, which will massively boost revenue per user and lock in Microsoft as the central nervous system of business. Now, let's talk Amazon, where the main event also happens in October. October 5th, 2026, to be exact. That's when the big FTC antitrust trial is set to begin. This timeline shows how a perceived risk can actually become an opportunity. The market is already pricing in uncertainty, but any kind of resolution or even just clarity could be a huge catalyst, especially considering the strength of AWS and Amazon's advertising engine. All right, that's our stable core. Now, let's move to the next 30% of the portfolio, our growth engines. These are companies perfectly positioned to ride massive secular trends peaking around 2026. And here's where we get a little contrarian on the chip trade. Instead of the high-flying, super expensive Nvidia, the smarter play for 2026 is TSMC. Think about it. Nvidia is the frontline soldier, brave, but exposed. TSMC is the arms dealer. They make the advanced chips for everyone. Nvidia, AMD, Apple, you name it. They win no matter who designs the best chip, and they do it at a much better valuation. Next up, a trend everyone forgets: power. Every AI query, every model, every training run consumes a massive amount of electricity. In our grid, it's just not ready. That's where Eaton comes in. This 70% figure, it's not just a number. It's the sound of explosive growth. That's their year-over-year surge in data center power equipment orders. They provide the literal nuts and bolts, the picks and shovels for solving AI's energy problem. And to round out our growth engines, we've got two more winners. First, Netflix. Let's be honest, they've already won the streaming wars. By 2026, their new ad-supported tier will be a massive cash flow machine, completely reshaping their profit story. Second, over in MedTech, you've got Boston Scientific. They're dominating the cardiac space with their revolutionary Farapulse technology. And that product cycle is expected to hit peak adoption right in our 2026 window. Finally, let's talk about the last 20% of the portfolio, our high-conviction risk barbell. The whole strategy is to pair an ultra-safe defensive anchor with a carefully sized speculative bet that could deliver explosive returns. This slide shows exactly how it works. On one side, you have Coca-Cola, the ultimate defensive stock. Low volatility, enormous pricing power, and a reliable hedge against stubborn inflation. On the other side, you have Rocket Lab, a high-risk, high-reward bet on the future of the space economy. Coke's stability is what allows you to take a calculated shot on Rocket Lab's massive upside. So why Rocket Lab and why now? Because 2026 is its inflection point. That is the year the company is scheduled to begin commercial launches of its much larger Neutron rocket. A successful launch wouldn't just be cool science, it would position Rocket Lab as the first real challenger to SpaceX, potentially unlocking billions in contracts. Okay, so let's put this all together. We've walked through the macro shift, the 50-30-20 framework, and all the individual stocks. Now, here's your consolidated action plan for the 2026 supercycle. This right here, this is the key takeaway. The 10 high-conviction stocks for the new era. You can see our core safety net with Microsoft and Visa, our growth engines like TSMC and Eaton, and our risk barbell with Coke and Rocket Lab. Every single one has a specific, powerful catalyst timed for 2026, and a clear role inside a balanced portfolio. So look, the crucial point is this. The investment strategy that worked yesterday is not going to work tomorrow. The AI hardware trade is over. The era of AI deployment, the Great Normalization, is here. This is the portfolio built for that future. The only question is, looking at this list, which stock are you buying first? Drop a comment below and let me know. You're still using the 2024 AI Playbook, but the game has completely changed. Keep investing like that, and 2026 won't just slow you down, it'll wipe you out. A massive shift is happening underneath the stock market, and almost everyone is on the wrong side of it.